Hey, what's up, everybody? Happy Saturday. This is Crypto in the House. Saturday is August 27th. Not a ton of crypto news going on, or real estate for that matter, but I will give you what I think are the most important. What I'm going to discuss today is why Bitcoin dropped under 20K and why the U.S. stock market lost $1.25 trillion in one day, and as well as some real estate news, why rents are so high. So the first story I'm going to go with is from Cointelegraph. Obviously, this was a story covered by everyone. Jackson Hole, Jerome Powell, the Fed, the more hawkish approach he's taken. What we saw was U.S. stock market losing 1.25 trillion in a day, and as everyone listening here should know, the entire crypto market cap is just over $1 trillion. Let's hope we can hold that after all this news. But just to give you some sort of a perspective, the S&P closed down 3.4%, hitting the lowest level since late July. NASDAQ Composite Index shredded 4%. They say overall, the U.S. stock market lost more value than the entire market cap of all Bitcoin and altcoins combined. The total crypto market cap, fell at 1 point overnight, 9% almost, according to Cointelegraph. So I showed you a little chart here of where it did dip down under $1 trillion. Today we came back up over that trillion, but hey, who knows? The volatility, we could see it go up and down for a while. Just wanted to give you an idea of what was out there so you can kind of see what this sort of announcement did on a level of not just the stock market, obviously, but how that affects crypto. So something worth noting. Of course, then the FUD continues to come out more and more and more that day. Bitcoin drops below 20. We saw that today, obviously. Continuing the drop it took from its 60% from its year high. Biggest and best known cryptocurrency was down 1.5% to 19,946, which is, $300 from the previous close. All time, the year high was down almost 60%. So the coin, they're saying Ether was dipped 2.76%, losing $41 from its previous close, blah, blah. But, everything's down. As I'm trying to point out to you, it's not just crypto. Everything is down. So keep that in perspective when people you talk to give you the whole, crypto. Well, it's everything. So buckle up, I guess I would tell them, no matter what you're invested in. Binance continues to just do things behind the scenes and hear what they're doing. And I'm going to show you a chart on the next page, but they give security assurances in the Philippines Senate Banking Committee hearing, right? So they're seeking a license to establish a presence in that country ahead of a moratorium and providing educational resources for future traders and blockchain developers. So the quote here is pretty important. 78% of Filipinos remain unbanked, but crypto can help obviously decrease that number, as crypto assets holder will soon surpass the number of credit card holders in the country, which is not nothing. They also said it's sponsoring the training program for new crypto traders in the Philippines this month, and also in talks with local universities on providing courses and certifications in blockchain technology. From here, we're going to move into real estate because this channel, again, is crypto and real estate. So if you like this kind of content, please like this video, continue, showing up, commenting, giving me some feedback, and consider subscribing to this channel. And that way you can watch when I go live. I do this once a day, crypto and real estate, half and half. So going back to real estate, Zillow put this press release saying, buyers are getting more time as options in housing markets rebalance. Here's their sort of key points as the market moves back towards normal. U.S. home values fell 0.1% in a month, decline. The Zillow Home Value Index since 2012, right? That's the first decline they've seen. Home values fell last month in 30 of the 50 largest metros, but are still up 16%. So obviously the dollar is very strong. We get that correlation. The rising inventory is driven by homes lingering on the market and new listings trailing the pre-pandemic levels. It took just 10 days for a listing to go pending in July, 2 days longer than June. Okay, not that big a deal. Rent appreciation is slowing, but growth rate remains much higher than pre-pandemic levels. But I'm going to bring in some rental statistics. This is per Axios through the U.S. Census data. Asking rents in the second quarter were 23% higher nationwide compared to the same time about 3 years ago, according to the census data aforementioned. These rents, the landlords charge to new tenants as opposed to renewal rents. I mean, a lot of tenants will not get a rent increase, even with the pandemic. Depends, some people have the same tenant for a decade. If they're good tenants, most people will tell you don't raise the rent on them because they're taking care of the property and they're, on time, and you don't want to lose someone like that because that's the best tenant you can have. The price you pay when you renegotiate your lease is where they're going up. It's going up, but not as much. They're saying zoom out on a micro level, soaring rents contribute to inflation, causing the Fed to raise rates, put the brakes in the economy, puts the country closer to the possibility of a recession. The landlords are saying are passing this cost on to the renters. They're saying, well, if you're gonna leave, I'm gonna jack the rent again up to 23%, depending on the area, for the next tenant that comes in. So they're capitalizing on the strong demand for housing. People are like, well, I can't afford to buy now because mortgage rates might be 5.5, 5.25, and I'm gonna rent for another year. So basically, that and people who had to, want to get out of the city, wherever they're renting because they want to do work from home. So they get the more space and more square footage, but they're going to pay a bigger premium now. So it pushes the price up. They're saying for everyone, once landlords realize they can charge more, the demand will by the landlords, the allure will increase to capture as much profit as they can. This makes landlords all sound out to be greedy, but I know a lot of great landlords that truly do care about their tenants and, again, don't raise the rents on them, because they don't want to lose those tenants. And those tenants are very valuable because they are really taking care of the home. So, according to Axios, again, when there's more demand for pricier apartments, landlords may upgrade units to charge more. This is obviously very commercial driven. It happens in residential as well. But again, when you have these sort of bigger, complex commercial buildings, that's when you probably have less of a relationship with your landlord than you would on a single family or a small multi. Finally, it says the U.S. faces a housing shortage, and shortage also will drive up prices. So those are the factors that's contributing to this up to 23% increase and across the country. So with that, not much else going on, but I just want to share those stories with you. Again, please like this video. If you find value, consider subscribing to my channel. I do half crypto, half real estate news every day on a live stream, and would love to hear from you. I will leave you with this graphic of what we just talked about, just so you can kind of see it in perspective from 2006 through 2022 from the census. So with that, everybody have a great night. I will see you all on the stream tomorrow, and hit me up in the comments. Let me know what you think.